Hi, everybody, and welcome back to FANG Friday. This is Ross Healy, the chairman of Strategic Analysis Corporation and a senior portfolio manager at McNichol & Associates Asset Management. As you can see from the background behind me, we have moved to a new condo as of yesterday, but I have yet to figure out the optimal lighting conditions in my now completely dedicated at-home office space. However, if I appear to be a little bit in the dark right now, perhaps there is something more afoot than just the lights I am working with. Okay, we all know what the big news of the week was. The nice, even somewhat surprising, earnings and sales gains of NVIDIA. However, it's very interesting to note that overall, on a week-over-week basis, the gain in the price of the shares was not all that great. Nonetheless, it may have rekindled investor passions about generative AI after 2 quarters, which has seen a steady decrease in the number of mentions on corporate earnings calls, and therefore some falling away in the focus of investors on the subject. NVIDIA has forecast continuing strong gains looking ahead into the next few quarters, so perhaps this will bring back greater investment attention to this general subject. As I observed in the last couple of weeks, the FANG stocks have settled into sort of 4 distinct modalities, 2 stocks in each one. 2 with promising buy signals, pointing to much higher prices. 2 have already flashed very promising signals and are steaming solidly ahead. 2 are sort of mushing along. They're safe enough, but not exciting. And 2 look to be heading lower as their SVA technicals look to be aligning with their visible fundamentals. This has pretty much continued on in the past week. So by and large, there's not really all that much new to report today. Anyway, there is something for everyone. So without further ado, let's take a look at those FANGs and what went on in this past week. But as always, before I do like to say thanks to everyone who likes this video and all our subscribers. It really helps to grow our channel, and we appreciate it greatly. Okay, well, we know who to start with, eh? NVIDIA. And the stock, of course, had broken out nicely over its HB6. And that, of course, was a very, very significant breakpoint because that was the valuation high for NVIDIA going all the way back to its previous peak in 2000. Well, as you can see, heading into the earnings call, investors suddenly got cold feet, and the stock pulled right back to support before the earnings announcement. Well, of course, we know what happened with the earnings announcement. The stock just leapt forward, but as you can see, week over week, it's just up modestly. Nonetheless, heading higher. Netflix continues, I think, it's been consolidating for a little bit, but its earnings and sales have been coming through nicely. I still think it's heading to its HB2, which is 12 times book. Microsoft, despite all the excitement about generative AI and even with the NVIDIA announcement, Microsoft continues to refuse to break out over its HB2, which is 12 times book value. I'm kind of hoping, actually, with the excitement that NVIDIA is generating, that we'll get that breakout. However, we're not going to spend the profits just yet. Meta, prior to this week with Nvidia, Meta was kind of the big story. It had the big earnings gain. The stock jumped right to its bubble price, which is 7.4 times book value, and has been trying, I think, to break out ever since. And the reason that it's having such a hard time breaking out here is that the bubble price is the very, very long-term peak for this stock. And so it is requiring a tremendous amount of investor attention to break this stock out. Is it going to? I don't know, and I'll have to leave that decision for you to make. But right now, it's right on the cusp. Amazon just continues to work steadily higher, as does Alphabet, sort of. And one would almost think that perhaps that this NVIDIA announcement might kind of spill over a little bit as far as Alphabet is concerned, because of course this is big in AI as well. So definitely, I think a stock to watch and a stock to hold. Now, into every life a little rain must fall, and Apple just isn't working out. Okay, the company has apparently, for the moment at any rate, stopped its powerful share buybacks, and as a consequence, the structural prices are rising strongly, and Apple has cut through them and looks to be working a little bit lower, and that would be pretty much in line with its fundamentals. Okay, no earnings and sales gains for the past 7 quarters now, and nothing in the offing. And in the meantime, the fair market value is 50% lower than the current price. So we shall be watching Apple, but it is not a stock that I would be holding right today. And finally, Tesla. Tesla has had broken down and broken through its HB1, or 9.5 times book value, but has been kind of dithering right there, but dithering on the south side of the HB1. I shall be watching that stock carefully, but as you are well aware, I think the fundamentals concern me to no end. Now, to briefly recap, NVIDIA has taken over from Meta in terms of immediate excitement, although Meta remains at the top of my list in terms of immediate unfulfilled promise. Remember what I said about SVA breakouts. Breakouts are lovely signals, as they do 2 things. First, they alert you to the probability that the growth rate of the underlying company is accelerating. Second, they promise, as it were, the strong likelihood that the share price will advance at least to the next higher breakpoint, and maybe even higher, as that is normally at least 22% and can be more with any intervening balance sheet growth. This can be a very promising and very profitable market cue. NVIDIA very definitely fills that bill, and Netflix continues to show strength with its improving subscriber base. Now, when there's a very strong possibility of a breakout occurring, of course, any such stocks should soar to the top of your watch list. And both Microsoft and Meta are at key breakpoints right now. I must say that I find it intriguing to watch Meta dancing around its own very long-term valuation high, its bubble price, or 7.4 times book value. Do you get in right now or wait for a confirmation? whatever my own advice might be, it is as likely to be wrong as not. So I must leave that up to you. I still strongly suspect that a breakout here will come, but if it does, I think it will be of the sort of the breakout pullback kind before advancing higher. The third category of FANGs are those which are steady as she goes, and that's Amazon. The shares have been oozing higher, and it looks like the HB1 or 9.5 times book is in the cards. If there's anything more, we'll have to wait and see. The same goes for Alphabet. It looks to me as if it is trading without conviction one way or the other. But it is an AI stock for sure. And I am thinking that the NVIDIA results and forecast might provide some additional courage to investors to take a bit more of a chance with this stock. Well, that's 6 of the 8 FANGs, which are looking pretty good. Although I must emphasize, Meta and Microsoft must break out here. But at least one looks to be trying. Of course, everything cannot be coming up roses, and Apple and Tesla continue to be a major concern because of both their shorter and their longer-term potential growth outlooks. As for Apple, as I said before, without those share buybacks, the share price loses a lot of steam. There have been no meaningful buybacks for 2 quarters now, and therefore we can clearly see that a breakdown below the HB6 or 33 times book value is in evidence. Just as intriguing was the recent announcement that Berkshire Hathaway had sold a slug of its Apple holdings. Now, relative to its total holdings of Apple, it was a small piece of their total. But Warren Buffett likes to buy and hold forever, and he's sitting on a lot of cash. So selling even part of a holding cannot be a priority unless. So, is this a precursor to even more? Judging by the sales and earnings fundamentals, it should be. Is this just a rebalancing move, or is this a shot across our bow? As far as Tesla is concerned, it's dithering just below its HB1 price or 9.5 times book, as so often seems to occur where with Elon Musk, we're back on tenterhooks once again while investors decide what to do. You know my own investment opinion. I'd rather watch the stock than play with Musk's particular brand of fire. And so far, there is no need to change my stance. Overall, the performance of the FANGs continues to broaden out, and you need to be aware of some opportunities as well as some specific risks within the group. For now, this has been Ross Healy, the chairman of Strategic Analysis Corporation and a senior portfolio manager of McNichol & Associates Asset Management, reminding you that nothing, including investing, is difficult if you have the right tools. I'll see you next Friday.